before you talk of making money, you have to have a product or service you have to deliver. The product or service that you have to deliver. So, Solomon, as you are recording, you can share with us. So, I'm giving you that access to also record because we want to be sure that we are really recording this session. Very important. So, the starting point is you look at your product or service. So please, let's have that. What product do you want to sell in the marketplace? What service do you want to bring? What is the cost of producing that product? So that is the starting point of creating a financial model. So you must know what is costing you as an organization to produce a unit of products to the marketplace. And you must be able to generate it in a sequential logic in Excel. To say, okay, I need so raw material, I need labor of so and so amount, I need this. So you must have the standard costing of that product to produce one product. So if you have that one sorted out, you cannot drive it by the scale that you want. The choosing scale will not be, is it 10,000 products you want to start with, or is it 5,000 products, or is it 1,000 products? So if you know the cost of producing one, multiply it by the quantity you want to start. That will give you the total product cost. It's a service, maybe it's a laundry service. You need to be able to quantify your services, the cost that goes into laundering a particular garment or whatever. So you must be able to have your costing in place. So all these things are very, very important. So when you know the products, what is costing you for a product, it will help you to determine the right pricing. And before you can get to pricing, you have to know the cost of producing the product. Your operating expenses. Your product costs are variable costs. They vary to the number that you want to do. They are directly linked to that product. But your overheads are things, many of us that are accountants here, these are things that we already know. Your overhead there will not be your cost of um, the large cost because you are in business. Those costs you must bear, e.g., power. When you attend to any customer or not, you must pay for your electricity bill of running the office. You must pay salary for the staff that you have. So you factor all those things in together and now see if there is still a room. By the time you have done that, you now determine the profit you want to make, and then that will now decide the pricing you are going to do. And that is the difference between those of us that are educated, that have financial literacy in starting a business. That is what differentiates us between market women. Some market women over time, because they know how much they buy, they know how much they are selling, they just do simple mathematics. I bought this and selling, I am selling at 5 naira. So they will know how to do the margin, calculate their margin. And their calculation stop at the margin level. If they are bearing other overhead costs, those overhead costs, if it's too much, they'll just see that they are not making money. But in financial modeling, every cost must be factored into that Excel sheet that you are building so that you'll be able to mirror it accurately. So these cost drivers must interact with other variables to be able to measure the impact of our decision ahead before we go ahead to implement. So financial model is simply saying that before we take a decision, before we implement a business decision, instead of us to waste money and not get to the end of the bridge and notice that it is an unprofitable business, you first of all engage your thinking ability, get all the variables that you need to analyze, and put them in a model, in an exact model, in order to now determine whether that business is okay or not. You can also, the model can be built in a way that you have assumptions. You must make intelligent assumptions to build around those models. And you can alter those assumptions that what if I'm not, if I'm able to sell 1,000 units of this product that I'm launching, what will be my profit at the end of the day? If I'm not able to sell 2,000, how will my profits change? If they are going to, if the price of petrol is going to, maybe your business requires you to require heavy use of petrol. If the prices of petrol per liter is 900 naira today, if we move to 1,200, will you still be able to make profit? You simulate it, your Excel will, before you check the variable for fuel per liter, it will affect all other things that you have calibrated, and your profit figure will just show. So you'll be able to take decision. So now a lot of business are operating. A very good example is at the transporter. This morning, they are complaining that they bought fuel for 1,003 because of what may be happening. So these people now that they bought fuel, what model are they using? They just use their head knowledge to fix the to fix all these prices. So where they were taking for maybe 200 naira before, they may say it's 400 naira. They just try to get something. But as a businessman, you must know the impact. Sometimes when you increase price just like that, your customer may run away to better alternative. So you must be able to see your limit. And it is a financial model that evaluate all those things before you execute. For simple practice now, let's go to the next. We start with the basics and see how financial model works. There are a lot of things we need to know. Like I told us, this is an introductory class. And once you understand this class, every other thing we are going to be teaching or going on in this course will be easier to comprehend. Now, I want you to look at a business model as the root of the business. The business model. Do you know many it's so painful that many professionals don't know this simple fact. Even professionals, they don't know that the business model is very, very important in an organization. The business model. You cannot build a tailored financial model of a business without a proper understanding of the business model of that business. So, what simply is business model? The business model is how the company, how the business generates value. How do they generate value? What are the various decisions they need to take in order to be able to generate the value? So you must understand it. If you don't know your business model by now, that may be the reason why your business may be struggling. That may just be the reason why your business is struggling. Now let's take a broader look at this concept that we are trying to explain here. Now look at it. Now the business model is the root. It's like a tree. The root is the business model. You have to take a decision called pricing and costing decision. Pricing and costing decision. So for you to be able to give a good price, if you don't know your what much is costing you, there will be a problem. Some people, when they are doing business in a shopping complex, let's say it's a photocopying business, and they know the price of all these materials have gone up astronomically. So you just come, you are just doing photocopy. You see your mates, they are doing it 70 naira for one copy. Some people are doing 100 naira. You think, can they be doing it 100 naira per copy? They are too greedy. You just started your own business in the same complex, and you doing your own 20 naira. You start doing, you say, and people we are rushing you. Do you know people will rush you? This guy is a lifesaver. And the end of the day, by the time you count your money, you are not making it. You are running out of business. Because when you buy your materials for 40,000 naira, after the materials are finished, the ink has finished, the money you generated is just 30,000 naira. Then you know you're not in business. So your costing is very, very, it will determine your pricing. It will determine your pricing. The next thing you do is capital budgeting and investing. Now, every business needs capital constantly. Capital budgeting and investing. What level of capital do you need to operate as a certain scale of business? What level of capital do you need? If you are a pharmaceutical company and you are servicing a population, you should know the scale you want to operate and the level of investment that will go into. You have to plan it. That should be a budget of two. Then after that, you have the operational spending decision. Operational spending decision are now the day-to-day spendings like rent, like bill, utility, and the rest. All those things will go into your salaries that you pay, wages that you pay. All those things will now go into spendings. Operational spendings. Yeah. Yeah. I'm in a meeting. I'll call you later. I'm in a meeting, please. Yeah. So after that, you have your performance reporting and business planning and forecasting. A lot of companies don't do this. And that is where some problem could arise in a business. Your performance reporting and business planning is very, very key. When you are when you are making your selling, you are selling, you are doing capital budgeting, you are spending money, you must be able to get your team together on a monthly basis to evaluate your reporting. How are you performing? Compare your reporting, your performance with what you have put into the business. Then you can now plan. You can now use that to do your business planning, and you can now forecast into the future. So all these things are decisions that you make. At the end of the day, you know, value creation, value created out of the business. So that is what we do. Now, still in financial modeling, what is the objective? Your financial model should be able to explain key variables of your business decision to relevant stakeholders. Now, your financial model is not for you alone. You are making your you are creating your financial model for decision makers, for other stakeholders, maybe for investors. Your financial product will also be for your investors. And what you need to do here now, this is the you are not breaking those things down. Those things we have discussed about, you are not breaking it down. And these are the building blocks of your financial model. So your pricing and cost decision, you must calculate your standard cost and pricing based on cost. Your standard cost is your unit cost of producing a product. That is your standard cost. And for you to be able to know your standard cost, you must know what the industry is saying. You must be able to research so that you'll be able to buy from where you are going to have competitive advantage. If you do not do research, let's say you want to start selling phone accessories, you did not do your research to know where they import this thing from. You are not buying from the market. If you are buying from the market, to spend, there is a margin that you are not enjoying because you are buying from the market. So you just put your own margin. If you now want to, maybe you now have enough capital, you can start from that model. After a while, you have enough capital to now import. Now, what these my Igbo brothers are doing that are inside this phone accessory business, I've had opportunity to audit a couple of them. And I want to do their business so that you make money. They explain to me what they do. They simply do location, coalition. They join forces together. So all the people selling this phone accessory in major market, they put their funds together, and through trust that is enabling the business, they are able to use a major importer in a major manufacturer in China. They will give them specification. Those Chinese people that produce this thing, if they want to give you consignment, they will give you minimum order. That minimum order is too much for one particular dealer to take. So they now join force together and they put their money together, they meet that minimum order and they ship it down. They very cheap for it's like blood money. So they bring that cheap because they distribute that within themselves and they sell. So this is how they make money. So scenario calculation with respect to price and demand, they do all these things intuitively. But as professionals that we are, all those things they do intuitively, they do out of learning job and apprentice over time. They make those decisions. The financial model is typically an Igbo man that is into business, doing spare part and all this buying and selling. They have the business model in their head. They will just do it and they will still make their pain in a way. But imagine if they now have a financial expert, or if they too, they are not financial enough to do those financial models. They will know how much exactly they will make and they will go for it, they will implement it to letter, and that is how they make money. This financial modeling is what experts do at big level. Even the Dangotes of this world, they do all these things. Getting decision, do you want to buy or rent equipment? Sometimes the very elementary stage, it might make sense for you to rent because of the capital that is involved. You rent. Those that are into mining, they have this equipment that they mine. Even when they are telling me 5:30 this morning, somebody was already calling me. I was already giving him advice, trying to blast, is trying to go to the mining field and they need the equipment, 300,000 naira for an equipment to blast and do all those things. Those equipment, if you want to buy it, the capital involvement there is huge. So they rent, and when they do certain things, they instrumentally they are making it. So do you want to buy or repair some of your equipment? So you do those decisions. Sometimes the cost of repairing one small equipment, those heavy duty equipment, you might be running to millions, multiple millions of, maybe you have 20 million to repair an excavator, and you to buy a new one is 200 million. You take that decision to keep preparing. So you do your analysis and see how it's going. Capacity planning. Capacity planning is another thing. There are some houses you see, very big houses. The owner could not finish building it. A very big house. He paid, but the thing along the line, his inflow reduced. He could not finish the houses. That is, somebody did not plan that capacity. It would be better he had built a smaller one. He built it to the ending and he has a roof over his head than to plan huge, and at the end of the day, so many projects suffer that kind of wrong decision making. They did not plan the capacity in their financial model. So your financial model it must have capacity building, and that is what we call scenario. You have scenario one, you want to operate at 5,000 output. Scenario 5,000 output. Scenario three, 15,000 output. Each of these scenario has different level of capital budgeting decision that is pliable to those different categories. So all these things you must be able to note them, you must be able to sketch them down and build your financial model. Operational decision. Do you want to do certain function by yourself? Let's say the marketing. Do you want to do the marketing by yourself? So many entrepreneurs started out. They did the marketing themselves. They learned some skill, how to market online, how to do certain, and they were just doing it, and they were doing because it is their own. They are doing it with passion. Middle of the night when people are sleeping, they do this and they are getting results. When they get so big, they want to outsource. From the beginning, you can think, will you be really efficient if you do it yourself? If you are source, how much is it? Put the amount there and build your model. So these are decisions you need to take. So when you do it yourself, you might not pay yourself. When you are sources, you are going to definitely pay the sourcing complaint. So you build it into your model and see what comes out. Fixed versus variable cost commitment. Yes, there are fixed element of your cost. There are variable element of your cost. You may be able to identify them and put them in your financial model. Operating and marketing budget. All these things you are also going to do. Then you talk about forecasting and projection. Here you do your three statement forecast, your income statement, your statement of financial position, which we normally call in the olden days balance sheet, and your cash flow statement. You must be able to build them too. They are integral part of your financial modeling. And you must now be able to do scenario managing. Scenario managing now, this is where your assumption into play. Your assumption, if inflation rate is 16%, if inflation rate rose to 29%, if exchange rate is currently doing 1,600 naira for $1, if it rose to 2,000, and maybe your business is import dependent, will you be able to cope? Will you be, to what extent can you simulate all these things so that you can think 360 and see how you're going to get a bailout if those financials are not speaking well. So to build a financial model, these are your steps. These are the steps. You must start with the end in mind. What does it mean? It means before you build your model, you must know the various, you must know where you are going. You must know where you are going. This business, I want to make 50 million naira profit. What is the end in mind? How do you need to make 50 million naira profit? You need to know your costs, what is costing you. You need to know all your expenses. You now need to factor your margin on top and build it all out. So you need to build the right structure. The structure of your financial model is very, very key. Is very, very key. You build the right structure. How do you build the right structure? In Excel, number one, your assumption might be there. Your calculation pages must be there. Then you now drag them to the main model. So the main model is usually like a financial statement. In a financial statement, everything is straightforward. But the value that you are dropping from, the value that is reported to each line item, is deriving its value from some other calculation that you have picked up somewhere within the Excel sheet. It can be within the time sheet, maybe down. You have calibrated those calculations there and they are feeding into those things. So you must figure out what series of thought you must take to get to that specific destination that you want. How is your model going to answer fundamental questions about your business? This is what I was talking about scenario planning. If exchange rate, what is the future? What are your alternatives of getting resource? So you must that will now force you to say, okay, this raw material that I so depend on in getting from Cameroon, where else can I get it in Nigeria at a cheaper rate? Because you are now looking at the exchange rate, you are not thinking outside the box. So by the time you put all this in your financial model, it will make you think holistically. Number four, why are you making this model? List out all the questions you need to answer, order them by priority. Financial model is not an academic exercise. It is a practical reality of business that should answer your question, that should give feasibility to your business. When we talk about feasibility study, you are looking at the viability of your project. So you must be able to must be able to ask a lot of questions. What is the minimum output that you can drive? This is your break-even analysis. Your financial model should be able to tell you that. What output do you operate that will give you a desired level of profit? Your financial model should be able to tell you that. What marketing cost will give you a push to get a customer. So your business model should tell you the cost of acquiring one customer. So please, I want us to emphasize this play because we're not just teaching these things for business sake. We want to be expert. We want to be better decision maker. We want to be able to advise our company or run our business very, very well. So you should know your cost, the cost of acquiring one customer. If you know the cost of acquiring one customer, then what is the value of one customer to your business? What is the value of one customer to your business? So you don't create an assumption that if I have one, maybe a consulting company, if I have one customer, after I've removed all the cost of delivering the services, what will remain? Okay, take for example this particular cost, for example, let's use this as an example. Oh, this cost, if you look at the fair value of this cost, it will not go anywhere near 25,000 naira. But we are looking at, okay, if you have a social number of people key into this course, I think it's a doable thing. So you know the minimal break even, and you go ahead and you go for the numbers. So sometimes you look at the numbers, it is the numbers, your turnover that that will encourage you to totally reduce price. Sometimes if you are not able to get the desired turnover, you might not need to increase price. The complexity of giving services to multiple clients at a low value may not be realistic. In that way, you now have to go premium. When you go for premium, say this same cost, this same thing, everything that we are doing now can go for 150,000 naira. And you are just looking for maybe 10 or 20 people. Okay. And you are ready to go the extra mile with those 20. You are ready to even do after things attention for them one-on-one. So those are so your business model. When some people might want to do mass market or reduce, some business might focus on high end. Let me get the rich people, the people that can afford 150, and they target them, they use advert to target those people. And so your business model must answer your question and what you want to do. When you have all these ingredients before you can now build your business model. Question so far before we move ahead? Any question? Can we move ahead? I want to know. I wasn't talking to myself so far. Can you all hear
I
me?
think you can move forward, sir. Can hear you,
Yes,
sir.
we are following.
I have a question.
Right. Thank you very much. I just need that feedback. All right. Now,
Hello, sir.
go ahead. Question.
Okay. Based on what you've said so far, financial model.
Yeah.
Because of the dynamic economy that we have,
Mm.
and you know that financial models are usually created before businesses would commence business, if
Mm.
possible. So
Yes.
now my question is, because of the way the economic situation of, for
Mm.
example, Nigeria is, and its dynamic um, way of making business thrive or operating operate successfully, how do we change it or change the model to suit the changing economic
Ladies.
economic environment?
Yes.
Yeah.
You- Thank you. Thank you very much for that, your question. Now, your financial model, one of the quality of financial model is that it is reusable. Please, we can
Um,
just mute our mic so that we don't have echoing sound. Now, one of the quality of a good financial model is that it is reusable. What do we mean by reusable? You all the cell you have assumption made. You can go back 6 months later, assumptions have changed drastically. 12 months later, those assumptions have changed drastically. You can go back to that exit, dust it up, go and put the new assumption based on the reality, and you see things there. It's where scenario playing came on board. Because of this your question, there's what we call scenario play. Scenario playing is to assume extremes. So for the Nigeria economy now, companies are now realizing that the Nigeria economy is so volatile, extremely volatile. So models are being built, more variables that we hasn't considered before are now entering those models of today. Will not mirror political instability. They will mirror um, unenvisaged pronouncements. Like when our president came on board, the speech that was given to him, subsidies was not in that speech. Some people have leaked those speeches out to foreign investors, to people. There are people that are more interested in this thing because there are billions of naira, there are millions of and dollars anchored on what the next line of government is. So that day, I remember I bought fuel in the morning. bought fuel at let's remember, I bought fuel at maybe 140 a day. When they say fuel subsidy was gone by the evening when I went to filling station, we were now begging because they were refusing to sell. We are now begging to buy that same fuel. 150 day from 140 because of a statement of someone. So the economic, if you are running a model and the model you are running for your production, you have already put the cost that the fuel you are going to use fuel 145. Maybe you have even be so pessimistic. You even use 200. Even when you use 200, I'm sure your line manager will say, 200, waiting, why now? And within a day, you are now dealing with paying 450, 500, 600 for fuel. You can see that your financial model has immediately crumbled. But what do you do? That same day, you visit your model, you put the new variation and see what is going to happen. Immediately, your pricing, the time before you, because you have a model that want to arrive at, you have the end in mind, you figure your profit level, and someone will change the pricing. If you have linked that properly, the pricing and everything will just change. Your new pricing, your financial model will reflect your new pricing based on the fact that one variable don't change. Your new advised pricing will showcase. That is the power of. So you cannot immediately, the next day, you are advising the new price of commodity, the new price of the service you are doing. And that is what happened. So that new price, people do not operate robust financial modeling. It will take them time. They'll be feeling guilty that they just increase the price anyhow. They'll be reluctant to increase it, but the increment is just head knowledge. Before they realize it that they've not increased it well, they have lost money. So that is why your financial model must be dynamic. Thank you for that question. So key features of a clear financial model. How do you know that your model is there? What are the characteristics of a financial model that is okay? Number one, readable with labels that are self-explanatory. So you must be able to do coloration. If you see financial model, it's full of colors. Plus, readable labels. They will label different session. Maybe this is the assumption session. This is the calculation session. And this is, so you will label them. You explain them such that if anybody open that model without calling you to come and be explaining, the model explain itself. The various figures are arrive at the model will explain it. The flow is logical and easy to follow. So the logical sequence of how you are writing, it must be, you must know the flow. It is usable 12 months later. In a Nigerian situation now, every 3 months, you should be revisiting your model because the way things are changing in Nigeria, within a month, you could have issues. I work for a real estate company called P1 Group. Many of you know the company I work for. So when I came on board, I was bustling with a product idea. And by the time I was interacting with the president, I was like, can we go into this? I was so passionate about that product. What is that product? Mortgage. Building houses for medium income and high income and low income, and we just build houses for different people and we allow them to pay over time. You know, this subprime market within the in developed country, this is what once you have a job, you pay into home ownership scheme, mortgage. And I was like, yes, we can do it. By the time the woman, the madam, my president, Dr. Jeno Mary, I respect her, very intelligent woman. She sat and she said, "Is everything I said is perfect, it's okay, but the Nigerian environment is too volatile. You have already done your model, financial modeling, right? You have calculated your cement, your bag of cement to deliver a unit of housing, the all the equipment, the materials, labor, you have calculated them, you know how much it's going to cost you to build 2-bedroom flat. You know how much it's going to cost you to build 3-bedroom flat. And you have now put your margin, and you have put the time value of money margin on top, and you have spread it out for them to be paying little by little while you are still building. In the 3-month cycle you want to build or 6-month cycle you want to build, the price of cement in the January might be 2,000. March, that same price of cement might have moved to 9,000. It rubbish your financial modeling. You go back to go and communicate that to the person that the money was supposed to be paid. Let's say the person have agreed to be paid 50,000 every month from the salary. You are now saying no, you should not be paying 75 because price of cement, they will not take it to you. And that is some of the reasons why mortgages are not working in Nigeria. But companies that are still ready to do all the variables, they will still work it down, they will still put all the scenario. They cannot edge, they cannot buy, do forward buying. Those are what financial model will not teach you to do. You cannot do for the circle of that project, you have already the price with the manufacturer, and that will now make decision alone to do forward buying will have bring stability to the price of the net. You have fixed it. So when the price goes up, you already have a contract that they will supply to you at so and so amount. So anyone can figure out what you are doing and know what your assumptions are. So your assumption must be stated. The assumption, there are two types of assumption you make, or assumption are in two form in financial modeling. You have the written assumption. Then those assumptions has implication, numeric implication, either in percentage format, either in decimal format or numeric. You now flow it into the exam. So the different calculation and logical steps are separated. Don't put numerical input into your model because they are difficult to correct when looking for errors. Now, this is an expert advice. Many people make that mistake of putting their numeric value. Now, what I mean by numeric value is this: you are into an Excel sheet. You now say equal to, you put your equal to, you now say equal to 10,000 times 3%. You now put it back. You now put enter. You know, you have put 10,000. That 10,000 is numeric value. It may be difficult for you to know that it was 10,000 you put there, especially when you are trying to look at trying to look at what went wrong. Instead of putting that equal to 10,000, put 10,000 as a model. Maybe that is the baseline price of that input. You put it in your output, you put it in another sheet or in another form, and you label it so that that output, if you want to change the output, let's say the input now, for example, fuel. Let's say your fuel now is 160. How much is fuel now? Let's say fuel is 800 naira. You now see 800 naira price. You are expecting that the fuel will increase by 3%. You now say 800 is equal to 800 naira times 1.03. That is 3% increment. Now, when you put it inside that cell, you will not remember again. But if you put it in a separate place, you just go to that place where you have all the calibration and change that 800. When you change that 800 to maybe 1,000, the current price, it will automatically refresh your model. So these are rules that make your financial model very, very clear. Today's class is for us to understand the basics, understand what financial model is, so that by the time we start doing them, we can now getting started with financial modeling. So you have to think about the business. You have to thinking about the business means that you have all your costing, all those things we have been talking about. You have to know your numbers. You have to know your numbers. Now, as little as this thing is, this is we respect some of our acumen businessmen with strong business acumen. They know their pricing, they know their costing to the minutest form. They will tell you how much it takes to make a bread for a bakery owner. He knows how much it's, how many cup of flour, how many butter, quantity of butter that we mix together to make 5 loaves of bread. He can tell you because he has those things. He has done research. They have patronized it, so he knows the business. So your research here now, you have to research. Assuming you want to set up a bakery business and want to do financial modeling for them, you are an accountant, you are wearing card, you don't know how to bake bread, but you are not the consultant. You now have to go and do your research. You have to go to a bakery. You have to speak with those people who may be illiterate in speaking English, but they are good in, they know all cup of, they know all measurement. You now have to go and do those research with them. Write down all the aspects worth analyzing. Everything that needs to analyze, you analyze them, and you make some educated assumptions. Now, going forward, let me explain this. Let me make this statement. Financial model, you can make your financial model using your Bible with a paper, just white paper like this. This white paper, this A4 paper, with your pencil or your Bible, you can begin to draw. You can begin to put your, do your diagram, draw. And as you are thinking, you are doing your canvas, this your canvas, you are analyzing your business. That write-up is also your financial model. Financial model is not until you enter Excel. That is the basic form. So financial model have existed long ago before the advent of computer. So when you write and everything is a financial model. You now take it a step further to now program it in a form of Excel, following a sequential logical order. Then you can now say you are doing financial modeling. There's another advanced level set that is even advanced than the Excel financial model. That is software. There are some software now that are built and tailor-made to each industry, whereby the builders of those software, they've already thought about the variables industry by industry. So if you are in pharmaceutical industry, they give you a pharmaceutical industry template with all things you need to think about. You are the one that will be saying this one is not relevant, this one is not applicable to my business, this is not applicable to my industry. You now be ticking them. Then those ones that are applicable to your industry, you now pick them. You put them. It's a software. There are software for financial modeling. So I'm just telling us from the basic, from the simple one, you move to Excel. Excel is still there. The highest level is those financial modeling stuff. There are some financial modeling, if you go online, that you can pay. The last one I was looking at, the one I was checking yesterday, it was, they asked me to pay $150 to get that model. It has 134 pages, Excel sheet. It's a financial model. You pay $150, so you not download that Excel sheet, and 90% of 90% of those things that may be in that Excel might not even be relevant to your model. So that is why I am taking this pain for us to understand that financial modeling is tailor-made. You have to keep on thinking in your business, and that's why the assignment for everybody now is to build a case study, a structured case study about your business model. And you can create your own financial model that you are going to use it to advise management on every line of action that they need to take. Now, let's go. We have a few slides to finish so that we can open it and ask questions. So the first step in financial modeling is thinking about everything that is involved in business and making a list of it. How many customers on an estimate will buy? You have to estimate the number of customers that will buy. What price do you pay for it, or will you charge for that product? What goes into that product? The cost. What goes into making that product? How do you make the product? So when you know how you make the product, then you will now see some risks, some things you need to take insurance on, some things you need to do to ensure that the pricing are captured Why we are doing this thinking round is because we need to, maybe this slide, I might need to also share this slide with each and every one of us so that we can have it to guide us. How do you deliver the product? So delivery, some people just do, they don't do analysis. Delivering product. Do you know many people operating school bus, running the school bus has almost crumbled the business. They will charge a particular fee for school bus. The school bus will spoil. They will repair. What they want at the end of the day, all the profit they're supposed to make is going to maintaining school bus as a. Why don't you just outsource school bus? Why don't you just get a company? Is it company your name must be on your school bus? Why don't you just outsource and get a reliable company to handle that? Because when you outsource a reliable company to do that, if the particular bus they are using got spoiled, they will improvise another one with switching costs is very fun. To assign another bus to you, and your business will not be disrupted. But if your carpet or your jar bus got spoiled, your is a lot of disruption. So you to look at how will the product be delivered or how will the service be delivered. You think through. You need to use your business canvas. So what is business canvas? That is thinking through your business process to look at how you are going to really make those deliveries. You look at your people, you look at your product, you look at your content, you look at your marketing, you look at your processes, you think through and picture all the money you are spending for them. And you now spread it across all the whole product to actually get your real value of that product. Now, lesson summary. I want to summarize. Now, the financial modeling is the task of building an abstract representation of a real world financial situation. So it's a real world. That is why it is you must understand the science, you must understand the logic. It's a real world business you are doing. Financial modeling is understood to mean an exercise in interest pricing of corporate finance of a quantitative nature. It's about translating a set of hypotheses about the behavior of the market or agent into numerical prediction. That was the question my auntie was asking. That those hypotheses, if they flunk, you must be able to build hypotheses around you must have a mastery of your industry and build hypotheses that can help your business and capture them in numerical prediction. The key features of the financial model are to think about the business, write down all aspects worth analyzing, and make some intelligent assumptions. The first step in modeling is anything is modeling anything is thinking about everything that is involved in the business and making a list. You must make a list. A financial model has many uses for company executive. Financial analysts most often use it to analyze and anticipate how a company might be affected by future events or executive decision. If you have a financial model, now that things change, you quickly, based on the price, based on the current crude price, you know some people in some organization, they are finance professionals. They check the Brent price of crude oil on a daily basis. They check dollar price on a daily basis. They check inflation on a daily basis. They check the market trend of their principal product or principal raw material on a daily basis. And they put those things into their product to advise management part time. The output of a financial model is used for decision making and performing financial analysis, whether inside or outside of the company. Inside the company, executive will use the financial model to make decisions about raising capital. You can see the banking industry now, they are raising capital. They will have factored in level of capital they need to make so that they can be a solid bank, how they are going to go about it, what is going to cost them, making acquisition, growing the business organically, or you do some other things, selling or diverting asset and business units, budget and for capital allocation, valuing a business, financial statement, ratio analysis, and the rest. The question I want to ask is, our government that they are borrowing money every now and then, are they doing financial modeling where somebody will sign a document, because he signed, he's entitled to 5%. Because he signed, some other party consultant is entitled to 40%. Loan that we have not even disbursed, 45% of that loan is already gone. Is there a financial modeling? So accountants, you powerful people are in this meeting. So please, please advise our government very well, and may God help us. So there's a class activity for us now. Class activity. So, and I'm going to call anybody to answer that question. Yeah? Arrange the business model in the right order. Arrange the business. If you know the answer, just which one should come first, which one should come second, which one should come third, based on what we have done today. Arrange the business model in the right order. Yes, who want to answer the question? Who is answering the question?
Me, sir. Emmanuel.
Okay, go ahead, shoot.
So we have number one, pricing and costing decision. Number two, capital budgeting and investment. Sir? Say what, sir?
It's the answer you are showing, not the question. I was wondering.
So I already got the answer automatically like that.
This is a quiz. Getting the answer. This is a quiz.
So, okay.
Look at it. Yeah. This is
I
a
will
quiz.
still go again, man.
Okay.
So number one is pricing and costing decision.
Okay.
Number two is capital budgeting and investment.
Okay.
Number three, operational spending decisions.
Okay.
Then
Number four.
yes, performance reporting and business planning and forecasting.
Okay. Then number.
The last one, that's
Okay.
value created out of business.
Okay, fine. I want to ask you the next question since you have seen the answer. So the question is, how does your organization apply these things? So number one now is let's go to the answer. Number one is pricing and costing decision. So
Yes.
how do you cost? What are you into?
We are into real estate.
Okay, so your pricing and costing decision, what activity go into it?
Well, we just got the lecture today and I can't really apply it to the real world.
Somebody can apply it, please. Somebody from the participant, that's your business, and let's practicalize it using your business quickly. Another person, please. Another person. Another industry. I will call on, who can I call on now? Madam Kumbi, please help us. Madam Kumbi.
Good morning, everyone.
Good morning.
Well, my company is more like everything is driven from the headquarters, which is not in Nigeria. But the one that I can easily relate to is the pricing and costing decision. Like we are more of a servicing organization. We are into telecom service providers in the telecom industry. So for our way is a projectized environment. So every PO we get is a project. And the way the company is structured, every project must have a minimum margin that is given. Like at least you must have like a 30% margin. And that's driven from the top. So any project you are getting, by the time you are calculating your cost and the price, before you give out the quote at all, you have already ensured that you are going to make a minimum margin of 30%. So
Fantastic.
that is how that's even like the baseline. That's where we start from. So even as you are going, as the sales guys are going out to get any quote, they want to give out any quote, they are running it through internally, and we are looking at, okay, what's involved here? What's the cost? How much is it going to cost us? Can we still make the minimum 30% margin in this instance, margin, before we now take into consideration overheads, which is like a general, but for each project must make at least 30%. Some can make 35%, 40%, but we try to have a minimum margin of 30%.
Fantastic. So your decision here is that any project that does not return 30% margin will not be accepted.
It will not be accepted, except maybe there are other factors they are considering. Maybe they want to break into a new customer, or they are looking at, maybe they want to use it to get other businesses from that a particular customer, or there are other things they will consider, but that will now be a management decision.
Okay, the template you are using to do your costing, is it in Excel format?
Yes, it's in Excel, but we have a dedicated department, for instance,
Okay.
globally, that does that, which we call bid management. So that department, even when any sales guy goes out and says, "Oh, I'm getting a business," even if before it even gets to the final stage, you are just proposing the proposition. You are still talking to the customer. You are telling them, "Oh," so we have a funnel kind of where every salesman puts in any new opportunity he has. So from there, they're already looking at the cost. They're already saying, "Okay, how much do you want to charge?" So sometimes even when the customer is coming back to say, "Give us discount," they are putting it into the big picture, into the calculation, and checking that, how much discount can we still give this customer? 2%, 3%, So they're advising the salesman. As the salesman is going back for more discussion, the bid management is telling him, you can't go below this. This is, if the customer is asking for discount, this is the range of discount in percentage that you can give. So we have a dedicated department, kind of. They can get information from everyone. Sometimes they reach out to me when they are talking about tax, they are talking about other things to the finance. But for a salesman cannot take the decision wholly on his own to say, "I'm selling, I've gotten this PO and that's fine now." No, we have a dedicated department that works on more or less like this pricing and costing decision for us.
Thank you very much. So you can see that what we are discussing is very, very applicable to many industries. So I want to call on another person. Let's also have insight from his or our own business. So I'll call on Victor Odetayo. Mr. Victor Odetayo, please, you have the floor. Tell us what you do and how you apply this. Are you with us, sir? Okay, Vincent Yaya John, you can also speak to us. Is there anybody in service industry, like consulting? How do consultants apply this? Oga Michael Jaga, speak to us. Let's learn from you, sir.
Hello. Good morning, everyone.
Good morning, sir.
Sorry, I've been in and out with other things, but I think I'm getting the grasp of the discussion thus far. I think for service industry, especially where you have a lot of manpower, because what you consider is the man-hour majorly as your variables. Because most times, whatever procurement you do, you pass it to your customers as out-of-pocket expenses. So majorly is hourly rates that you consider, and let me just put it at that. Maybe others may also add to.
So you know
Because
your
whatever procurement
you know your
in the
man-hour.
course of,
Sorry, sir, Oga Martins. You are big Oga. I know you now. So as a MP, for example, your man-hour as audit junior or audit senior. So how do you
yeah,
decide man-hour?
okay.
Mhm.
Okay, it varies anyway, and thank God we have a guide from the respective institutes as to what your rate would be. But given the situation in the country, it's not all the firms that will be able to apply the rate charge out rates as given by the institute. So you have to apply, looking at the antecedent and the previous years, what is it? So what you then need to do is to scale up in terms of the rates that you apply to the man-hour, because mostly you have the junior ones out in the field most times. So as the partners or seniors, you don't need to be on the field most of the times. So you look at because normally you're supposed to do your what's called time sheet to know the various hours that individual staff spend on particular jobs. That you can. It also depends on the number of assignments, because when you consider the man-hour, you also consider the number of assignments you have in the course of the year, and how you can also scale that to be able to attract more clients. So those are the things you consider.
Right. Thank you very much.
Thank you.
Finally, before I let you go, sir, do you consider the cost of acquiring one customer for your business?
Okay, the cost of acquisition.
Acquiring one customer.
Yes, it's important. You need to, because where would the cost? You have to go to a nightclub, in search of a customer, because it just happened. You don't have any business in a nightclub. But because you are aware that for you to be able to get these clients, you need to go to nightclubs. I've seen situations where people will enter flights to London just to be able to track down a decision maker. So where will you put that cost to other than your financial model? So you put in all this cost and then and be able to come up with what your pricing will be at the end of it.
Yes. Thank you very much. You've done excellently well. And the reason why we are doing this type of engagement is to bring practical reality to this. Because some people do financial model as analysts. The model is not robust enough. They don't capture the executive uh, share cost of customer acquisition. In the banking industry where I am a product from before we to audit and advisory services, we do when they are doing share costs, the MD cost, management cost is loaded in all the branches. So all their supporting regional head, their region support, regional manager, all these big wings that are within that are supporting that branch, their cost is loaded, and they now use a formula and a cost apportionment formula to do across board. So you might be in a branch as a branch manager. After you've done your plus and minus, you are making serious profit you are bugai, your shoulder is high. By the time the head office, the FinCon, I used to work with Access Bank then. By the time FinCon drops the monthly share of overloads, the big fast salary and all the executive movement, maybe they are flying first class to come to your region to come and close a deal for you. All those costs, by the time they drop it, some of those banks will just by default fall into loss. So the person that was doing like this before, by the time it's coming to NPR, is looking so sorry because they didn't anticipate their financial modeling of they should have anticipated those things and built it and say, okay, this is the minimum we should do for us to be able to meet up and look well. All these costs, we need to recover them. And that will push them. So that is where performance reporting and business planning and forecasting come into place. Organization that is very strong in doing NPR. If any organization want to move forward, your monthly performance review session, your business planning and forecasting must be taken seriously because that is where the value will now be made out. Because today they abuse you, they jab you, you did not do well. It will make you to think better. You call your team, you go to the drawing board, you look at your drawing board is now your financial modeling, you do some things, and it put you not energy in certain direction and get better value when next you are coming for presentation. So because I know some organizations are not doing this, and we need to, this is the more reason why organizations should take it seriously at the level of the organization to performance reporting on a monthly basis, very serious. I pray God will help us. So thank you very much for today. It has been an interesting class. In our next class, in our next class, we are going to be in financial modeling. We are going to go into how to create it using Excel. We'll now start all these things you have learned as foundation. We'll now start inculcating it. We have just learned the rules. We have just learned the model, what we need to do, how we need to get things done today. So this slide, I'm going to ensure I share it with all of us so that we can have it as our constitution for creating models. So once by the time you create your own model, and now there is a program for every one of us your projects for us to give you your certificate. You have to do this project, and it's for your own good. The project is for you to do a financial modeling of your business. So um, if your business is too structured, like Madam Kumbi was explaining, you cannot choose a business, maybe something you like to do as a side hustle. Maybe you want to set up a poultry farm or you want to set up a small business or something. You cannot choose something that you can develop, something you actually dream of doing when you're out of employment or something you think of doing as a side hustle. You cannot think of that project and build a financial model around it, a feasibility financial model around it so that we can see it dynamic. And that is what we call the structured case study. The structured case study is going to be individualized. But in the course of this training, we are going to have one case study that we are going to share the content, the story of the case study with us, and we'll now build a case study, we'll now build a financial model to answer all the questions of that case study. We build a financial model. So we are going to do that in this class, in the course of this class. Then the assignment, the project is now using the knowledge you have learned, you now build your own model and that you are going to run with. So that is all what we have for today. So let's have closing remark. Albert, what is our assessment of today's class before we close the class?
Thank you so much. If I can talk. Thank you very much. You've really practicalized. You've made it real, real for me personally, because I've taken a financial modeling class last year before, and I would say it was very theoretical, very, very theoretical. But at least I'm relating it very well to real life and with what I am doing. I think you've done a very
Thank you.
good job in the
Thank you.
introduction. Thank you very much.
Thank you so much. Thank you so much. Thank you. Any other person? Any other person want to give
Thank
us
you so much, sir.
yes. Your name, please, and where you work?
My name is Glory
Okay.
Basi. Yes, and I work with P1 here, Lekki office.
Okay.
Okay.
Oh,
Thank you, sir. First of all, I must commend your efforts for
thank you.
enlightening and touching all the vital section in this course. What I've learned today is that financial modeling can really, I mean, it's not something that every business or corporate organization should ignore, because it entails the whole financial business plan. And if a company must succeed, I mean, aside the finance, they must also put a structure to enable these, I mean, achievement and the growth of that organization. And financial modeling, like I've understood today, has touched the area of technology, that is IT, and see that where I personally, or in future, if like God permits and like I would want to. And it has also touched the area where I now understand that I have to put in certain structure. I have to look into market trends. I have to see the kind of technology tools that would enable me to, put the right structure in place to see that the business or any organization I'm working for goes forward. And also has broadened my understanding that one cannot do this alone. We like the business cannot thrive on its own. Business can thrive with the people in it, and the kind of input or the structure or the plans or the tools, say for any kind like this technology I've mentioned, then this software or application software, like you have said earlier on, and seeing that in the world at large, looking at the economy, one can really target what they want to achieve. I mean, considering the economical trends, whatever that's going on. So this so far is what I've been able to, understand. Thank you very much, sir.
All right. Thank you very
Thank
much.
you. Thank you. Just to cap it up, I think we've said it. My colleagues have said so much about the program, but just to also state that we're getting a lot of value, with less. Let me put it that way. So it's a value addition, not only to the participants here, but even to the institute, because at the end of the day, you are enhancing knowledge, and which will translate to how people perceive our institutes. I think you're doing a great job. And also point out that cash flow, modeling is just an advanced cash flow. And as they say, cash flow is the life wire of a business, not the cash. Because sometimes you see cash flowing into a business, but if you don't understand the dynamics, you discover that you will sweat at the end of the day. So cash flow is very important for us to understand the nitty-gritty, and we can begin to review it almost every time as the need arises. Thank you very much. I appreciate this, the lecture.
Thank you very much. Thank you very much. I want to appreciate everybody. I pray this record very well, because of the network problem, my speaker was not active. So I have to log on as a user, even though an admin right was given to me. So I'm just hoping that the recording is okay. So if I'm able to get the recording from one or two person also, I think Solomon also tried to record. I granted you permission. So please, there should be backup. So I pray we are able to get the recording so that we can share. So tomorrow is another day. We'll be looking at SPSS. I think that is the last class to make 1 week, right? And we've done, yes, that will be, we've done so far, we've done advanced Excel, we've done Power BI, we've done SQL, we've done today we've done financial modeling. So the last introductory class is tomorrow to make the first week completed is tomorrow SSP. So we are going to also look at the introduction. Our lecturer also send regards. He send regards. So our lead lecturer is send regards. So together we are going to be making it more interactive, more interesting to get value for this job. So thank you very much. Feel free to always
Oga
chat
Thomas.
me. Yes, sir.
Oga Thomas, can you hear me?
Yes, I can hear you. Your name, sir.
The issue of recording, because most of the time, most of us are in traffic, so there's a lot of missing getting this training. So like me, so when you were giving the summary that I joined, that I was able to get anything. So please work very hard to make sure you get that recording for us.
Yes, yes, yes. We will do our best. We'll do our best. Thank you. But please let us inculcate it. Something we do regularly becomes an habit. 9 to 10:30 thereabout. Let's make it automatic. Let's set automatic alarm in our system to always join. And once it becomes a repeated, consistent pattern, our brain will even be stimulated to learn at that period. Thank you very much. God bless you. So I think we can successfully bring the class to a close. Thank you so much.